We want to turn our attention to what's going on globally, especially with China. There's been a lot of talk that the Chinese economy is not only rebounded, but is performing incredibly strong in the wake of the pandemic. But our next guest, Leland Miller from the China Beige Book, he's the CEO, joins us now to say, wait a minute, not everything you get out of China is often true. And a lot of investors, perhaps, Leland, when they make decisions based on what they believe to be data out of China, are making a mistake. You pointed out right now that China is this concept that China's back to normal or that China's already seeing year-over-year growth. You pointed out it's not, and you know this to be true. How?
Well, look, I mean, we've been surveying thousands and thousands of firms throughout the year in China, and repeatedly they're telling us that things are getting better. They're getting better by month, by quarter. There's a pretty impressive recovery going on, but they're not improving on year. We're not back to where we were in 2019 or beyond that. Beyond that, there's also reasons to look inside official data to understand why we're not seeing an on-year recovery. If you look at the headline figures, you will see a big number, whether it's 5% or 6% or whatever it might be for fourth quarter GDP, suggesting that you've got this great GDP growth that shows tremendous gains over 2019. But the reality is that's not what is actually happening right now. You go into the numbers like fixed asset investment, or you go into retail sales, and you can see some downward revisions that make the numbers look much more attractive. So I mean, if you're constantly taking the 2019 numbers and moving them down, then you're going to always see improvement. But there's consequences to this. So we can say that China's having a nice recovery, but we also have to be very careful about how intense we say this recovery is, because the numbers being used are not what people think they are.
Hey, Leland, drilling down just a little bit and taking a look at China's recovery or lack thereof, depending on how you look at it. But what sectors of China's recovery are lagging the most? And on the flip side, what areas do you see as outperforming?
Well, look, from the very beginning of the pandemic recovery, we were seeing this being a supply-side, industrial-led recovery, which meant that manufacturing got up and running fastest, commodities was there. Produce, those were looking pretty good right away. Services, less so. Retail, even less so. Now, over the course of what has been a recovery, again, a nice recovery, we've seen services continue to improve. Retail's gotten better, but it's still dragging. So basically, the parts of the economy that are relied on for consumption have been doing much, much worse than those that are, could be ordered from Beijing, produce a lot of this, crank out a lot of that. Those things led. And now the question is, can the consumer catch up? Can household consumption catch up to the supply side?
How does this play out, though, for us in the United States? Because you point out that within China, small, medium enterprises are less confident in their recovery. They're earning less, they're producing less. But if you're an investor in the United States, what does that mean for you?
Well, I think there's a lot of comparisons between one of the most significant is that small, medium-sized enterprises are doing much worse and are much less confident in both places than large firms. If you're a large firm in China, you're looking at the headwinds and you see them as manageable, and you're doing quite well, comparatively speaking. SMEs, they're earning less, they're producing less, they're borrowing less, they're much less confident. That's true in China. It's true in the United States too. And I think that this is one of the major keys to getting a restoration of the old economic pace. We have to get SMEs up and running, more confident, more able to deal with their problems. That's the weak link in this recovery so far, globally and in China.
Hey, Leland, taking a look at Joe Biden's administration, the incoming administration, how do you expect the U.S. and China's relationship to change, to evolve over the next 4 years?
I think that the ability that Biden has is that, he was part of the Obama administration, which is seen as being very soft on China. And a lot of the people that are going to be in the Biden administration were people who were in the Obama administration. And with a lot of pressure coming from Congress, particularly the Republicans, but really both sides, they're not going to be able to do anything other than have a pretty tough face towards China. That's what politics dictates. That's what Congress dictates. So you'll have to have a pretty strong stance. The question is how much wiggle room will they have within that? They'll have some. But I think that the thing to keep in mind is Joe Biden has said over and over and over again that he wants his focus to be domestic. It wants to be on the recovering United States economy, which means that he's going to have very few political chits to use to pull back some of President Trump's stronger moves, to do anything that'll take a lot of political chits to engage with China. So he will be hamstrung to some degree, not in method. He'll be but he'll have a much tougher time sort of dictating policy compared to what President Trump had.